Hello, everyone. Yep, it's just me, Scott Gillum, hosting solo tonight or today for the ShadowTrader weekly private webinar. Peter is on a speaking engagement right now at a university in the Philadelphia area, so you'll be with me tonight. Hey, Michael, how's it, everybody? Okay, it's what? The 1st of December, brand new month, last one of the year. So let's kick this off a little bit with the crazy day that we've had. All right, as you see in front of you is the ES. And let me do something that is going to be, short-lived, the way that things are going now. That we had overnight session from yesterday. Let's go back to yesterday a little bit. Let me tighten this up. I just want to go over this chart briefly. Okay, a 15-minute ES chart. We tagged a brand new high yesterday after having a raucous day on Thursday where we went, okay, this is Monday. Here's the big rocket move on Tuesday. Here's the Wednesday move with a retracement after tagging brand new highs. Then we go into Wednesday, overnight to Thursday, tag brand new highs again on Thursday, after then selling off, coming back about 50%. And then today, all right, overnight was kind of flat. Value was fair, within balance again. Little dip before the market opened, and then as the tax situation, and I'll go into that in just a second, the tax situation kind of came back into okay, they may pass it. The market opened nicely about level from where it was yesterday. Tried to tag some new highs, and then we have what I call a gray swan event. Came out of Washington. Mr. Flynn is going to be charged by the FBI. I guess he's going to plead guilty. And then there were other stories to go along with that Flynn situation. And the market had a perfect storm to sell off. Those short-term traders whipsawed this all the way down. And you can see that we went from, on the ES, about 2650 all the way down to around 2605. So about 55 points on a drop, and now a recovery. Recovery came back up to about half back, flattened out, and now we're riding, well, what's this line right here? This line's the 200 period on a 15-minute chart moving average. Very comfortable area for short-term futures traders to kind of ride and say value is fair at that level. So that's where we stand right now with the market and the machinations that happened today. I congratulate anybody who took advantage of being short futures here because we triple topped, did a short and held on anywhere down below the 50-period moving average. Followed it down, put your stops, put your stops, put your stops, and then in this candle, on the bounce candle, once you got back up above the low from the prior 15-minute candle, that would have been your signal to take off those shorts. If you were one of those people who does trade futures and did do it that way, I applaud you. I couldn't find anything. I can't trade futures in the account for you on the time spreads. I don't trade them in my regular account. I don't really have the capital to do what I want to do with it. But let's do this. Let's change this over to the SPY. You can trade the SPY options, and that's my bailiwick here. Going along, double top, triple top, and then we fall. Well, I went to look for an option to take advantage of this fall just below the 265 level. That's about right here. What did I find? The VIX just blossomed from about 12 to about 17. Where do we stand right now? Let's see. The VIX stands, the VIX isn't even on this. Why isn't the VIX on this? The VIX stands right now at 1245, while the VIX was up around 15, 16. And they just ballooned the premiums on the options. It did not make financial and economic sense to buy a put that I would get in at this time frame and get out at some other time frame today to play this. It just wasn't going to work because they've expanded the premiums such the bid-ask spreads are so wide that I couldn't find a way to make this work. And I kept on looking and looking and looking and looking for the past, or for the time frame in here, about this 15-minute bar and this one. I just sat on my hands. I just could not get involved in it. So hopefully everyone was safe in this move on the downside. But what I want to start with, away from what the machinations of the market are today, is I want to go back to what we've been doing in the monthly charts. Let me go here and just grab up another chart for you. Hold on. All right. Here is the monthly SPX chart. And as Peter has said, I've said over and over again, we've been one time framing, which means higher lows, month after month after month. We're now starting our 12th month of being a higher low. Yes, it's only the first day, but that means that we have to have a low in December that's going to be below 25.55. I don't think the probabilities of us eclipsing that low from November is going to happen in December. It's a very bullish sentiment type of month. So my feeling is we're going to have 12 months of one time framing going up. This hasn't happened in any time frame that I can go back to on the SPX chart. So we'll say that we're going to have another month of one time framing to a bullish trend. Okay, on my chart, what are these two lines that you see that are moving averages? This is it's a moving average envelope that's 15, it's on the 15% above the midline, pardon me, yeah, 15% on the midline from where all of the monthly candles have gone. We're riding to the high side of that 15+% move to the upside. What does that bring us to look at? It brings us to look at the fact that we're getting to the top end of the range or the channel on the SPX. It brings on an ominous type of when is this going to break and when is the downtrend going to start and this one time framing going to end again. I think in my analysis and looking out, we may have a few more months to go. What's going to trigger that? That's a good question to ask. The trigger could be the interest rate yields on the bonds. So you take the 2-year and the 10-year, so you take the difference between those two. Once that goes to parity or to zero, use that date and count about 4 to 6 months out. That's how long we have to go to kind of let the momentum wane and then the market to possibly turn over, as recessions typically come 4 to 6 months after an inversion of the yield curve. So that's what I'm looking at. I'm going to be playing very cautious for the next 4 to 6 months just to make sure that that yield inversion doesn't get us to the point where we're topping out and starting to roll over. But let's take a look on a couple of the charts that we've got. That's the SPX on a monthly. Let's take a look at the NDX. All right, here's the NDX, which is the NASDAQ 100. Again, one time framing to the upside. I don't have the same type of comfort level on this 15% differentiation between the mean on the NDX. It has made a big move up since the first of the year. All right, and now we're kind of outside of that 15% band. I am more nervous on the NASDAQ 100. Again, these are the high-flying technical stocks. You've seen that in Amazon, Google, Netflix, Facebook, Alphabet. So those, I believe, are getting closer to the top than the S&P 500. If I take a look at the comp, which is the composite NASDAQ, which is all the NASDAQ, we're even starting to roll over a little bit more on this on a monthly basis. Outside of the band last month, inside of the band here. Very close. We could get to ending the one time framing on the NASDAQ this month. It's not out of the realm of possibilities here. So composite or NASDAQ stocks, I am more cautious about those. Now the RUT, I don't have the RUT as a indicator anymore. So I'm going to go to IWM, which is, let's get rid of these for a second. Hold on. Because those are on a daily basis. There we go. We've had a channel that was designed from April of 2016 and clipped August of 2017 here. And then I just put a channel which should be readjusted just a tad bit. I want to get the next high and those highs there. That channel that we're in right now on the Russell is still pointing higher. One time framing was broken, definitely was broken on the monthly chart for the mid-cap stocks back here in August. Actually, we broke it in March, started to one time frame again, broke it in August, one time framing again, broke it in November. Remember, November had some very big drops in the mid caps. And now we're climbing again. The channel is still pointing bullishly. The interesting point is, are we making higher highs? Okay, this is one day of the month, but you want to make sure that you can get higher highs from November's high of around 145 or 155, pardon me, on the IWM. If we don't make that, then there's the first signal for the IWM starting to roll over, and that's where you want to start playing cautiously, stagnation, or even possibly on the bearish side for the IWM. Now, let's take a look at some of the commodities. Let's do, let's do crude. Crude has had a big move. This is, again, monthly chart going back from 09, cresting in December of 11, flatlining all the way through 14, the big crash in 15 into 16, and now climbing our way back. What could oil do? Well, let's just do a technical piece of taking the tops. Oil has a trend line that would put it at a max of 80. I don't think that's in the realm of high probability at this point in time. I think there's even something better to look at. Did we, in the past year and a half, break a channel, or pardon me, break a trend line? And that's off. Hold on. This didn't get where I wanted it to. Did we break the downtrend line in oil? And yes, we did. Where did we break it? Well, we broke that in October. Now November. Now December. Remember, OPEC just had their meeting a couple of days ago and reiterated that they would hold the line on production through the next 9 months. That puts us into 2018. That's going to put a floor, I believe, under oil at this point in time that should keep oil in and around 45 to maybe $48 a barrel on the downside. But what is it going to do for the upside? Is there a potential to push us above 62? I think that's going to be a real hard road to push through because you've got 1, 2, 3, 4 months worth back here in April, May, June, and July of last year. That's a lot of overhead resistance to get through. So 62 is the top, 45 is the bottom. So if you can play that on a daily or weekly basis, I think that's a decent play in the oil field and those related stocks. Oil at 40 to 60. Very good, Eric. I think that would be a nice area to be, working your trades around. There are a lot of issues that you can use to trade those. If you want to trade the commodity itself, fine. I like trading options on the ancillary stocks or the ETFs on the oil. Let's move off of oil and go on to gold. Firstly, let me show you gold on a daily basis. Well, let's do the monthly first, okay, as we want to set monthlies. Here's the monthly trend line. You can see that, again, from 2009 debacle all the way to the peak in 2012, gold going from around, $630 to $1,900 an ounce. And then it's cratered. So what can you do if you want to do technically? We take this and just do a Fibonacci on it. How much? Oh, that's not the one I wanted. Wrong indicator. Come on, give me my Fibonacci's. All right. So we go from a low to a high. Let's take a look at this chart. I got a couple of things I want to point out. From low to high, halfway back, 50%, was where we were sitting through 13, 14. Dipped a bit in 15, came back up, dipped below the 61.8 from the high in 16, moved just above the 50% and came back down to the 61.8, back to the 50. Now, where are we hovering right now on this monthly bar or this monthly candles for gold? We're sitting right below the 50 period or the 50% Fibonacci. And on a trend line basis, the old trend line matched, bounced, 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 and here we go back up. So we've got this wedge forming up to the 50 fib. If I want to redraw this to the last trend line, which is up there, 1350 would be the tightest area that we could get to as we tighten this wedge together. But we need to pull across this 50 fib. That's around 1305. I think we push there, especially if we get volatility back into the market and the machinations of the movement from low to high throughout the days on the futures starts to widen out from the very narrow bands that we've had lately. We could see this 1305 hit, gone above, tested, come back down, tested again, and possibly break up to a range of around 1350 throughout the mid-year of 2018. Now, I wanted to, as I spoke, I wanted to get to the daily chart on gold today. What did GC do today? That was very interesting, and this is not going to do what I want it to do. Let me change the style. I don't want to price axis. I don't want to fit markers. There we go. Well, that's not what I wanted to show you. Okay. Here's gold coming about this week, all right? The end of October into November, kind of in a slow grind higher, big move down, up and down, big move up, cave back a little bit, move up. Now we go into December, right? Pardon me, the end of November. Push to that 50% level, that 50 fib, which is around 1300. Back away from it. So it's a look at the resistance, don't like it there, and they backed away. This was when? The 29th, which was this week. This was Wednesday. Yesterday, again, tax reform got people out of the commodities and back into stocks again, once again. The other part to gold is we've got this thing called Bitcoin. Why be in this yellow metal when you can do this Ethernet type of commodity called Bitcoin? I believe a lot of the pullback from gold and that money going into Bitcoin has caused a lot of this movement here in gold in the past few days and weeks. So they draw down gold Wednesday and Thursday. And then today, with Bitcoin taking a hit, down 18% yesterday and being kind of the crazy number that it is, pull from Bitcoin, put it back into something that you know is there and you can feel, touch, and hold on to, and that's gold, plus the market cratering on some sentiment news out of Washington. Gold made a big move. We opened on the GCs at 1277, spiked for about 15 bucks up to 1292. And as the sentiment waned on news from Washington, news that the tax reform is possibly going to get passed, gold pulled back. It's still holding nicely, just under yesterday's open and right within range of where it's been for the past 2 to 3 weeks. Bias is still up on gold. This trend line, if I want to draw a trend line from just a few weeks ago, it's still a bullish trend line. Channel-wise, let's just duplicate that and let's see what that channel looks like. Come on. There we go. Channel on this is expanding. And I'm going to take this and I'm just going to show you. We've got a megaphone wedge going on here to where the base trend line is at a flatter angle than the upper trend line. This widens out. So you want to make sure that your plays on gold or any other play that you have, ABX or Randgold or any of those other ones, that you want to make sure that you are watching the way that this upper trend line could be expanding to the upside while the lower trend line is slowly giving you a nice 4. That looks to be pretty solid and pretty well the standard trend line at this point. Let's see, what else can I tell you about? Okay, let's take a look at the last indicator that is out there that I've been watching, and this is the VIX. It may not be a good one to watch, but it's something of note that I want to bring to your attention. The last big spike that we saw in volatility in this marketplace was back in August. Well, first of all, let's go back to May. May was the last time we had a 1% move in the S&P 500, as opposed to, along with today's 1% plus move. Well, what happened to the VIX in May? We were sitting here at 9, 10 level, and then all of a sudden we spike up to the 15, 16 level, but it took what? 1, 2, 3, 4, 5 days to put us back in complacency once again. Spike in August. Again, a Washington-based sentimental issue caused the market to have fits. So what did VIX do, or the volatility in the overall marketplace for options? It was complacent at 10, and then all of a sudden it spikes, and it spikes to 16 or 17. How many days and what kind of pattern did we see? We had 1, 2 days up. We gave back 1 day, 2, 3, kind of consolidating, spike back up again, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe 2 weeks to settle back into this complacency mode of 10 once again. Well, here's our spike up with the last few days of November. Again, tax reform, a Washington sentiment issue that makes the market nervous. Spiked us up to to 14.5. Took 1, 2, 3, 4, 5 days to bring us back down. Again, we now have Washington, tax reform, issues with what's going on outside of market-related issues. Nervousness comes back in. So 3, 4 days of up move. Interestingly enough, the VIX spikes a double top, 1450, 1458. That's within 1 tick or so of where it should be. Do we hold this? Do we spike higher? Do we do like we did the last pattern? Spike up, come back down, spike up again? My thoughts are yes. We've had this happen. It's a little bit further divided in days between, but it's very similar to this last pattern. Not quite so much to May. If I want to look back to April to May, this was about 2 weeks. This one was about 1 week. Now we've got about a week and a half. So we've got a pattern here. Double top, kind of double top, double top. The big question for volatility going into the end of the year, issues that are going on in Washington, especially tax reform. Does this resolve itself back down to complacency, or do we start to make these moves higher and higher and higher? Watch what the VIX does going into the end of the year. Watch your option plays, because as the VIX or implied volatility expands, premiums get more expensive. Bid-ask spreads widen out. You can't get the great valuation that you could get with lower implied volatility for debit spreads. If the VIX starts to spike and continues to spike, look to your credit side as your plays, because as the expansion of implied volatility means more money that you can get on that credit in the right issue, played with the right time frame, can be very big and beneficial, just like we had back in 2015 and 2014. It's going to be an interesting time to watch volatility. Does it go back to complacency, or does it continue to go back to the upside? All right, so that's kind of the overall big market. I wanted to also get into the core sectors, and I've got some charts up here of the core sectors that we watch. So let's do this. These are on monthly basis. The premise here is the market has been rotating from one sector to another, to another, to another. As we see technology go, okay, I've made a lot of money in technology, I'm going to go away from that. They're going to go into the housing market, or they're going to go into the, the steels, or into the telecoms. Let's take a look at these charts one by one on a monthly basis and key in on this month. This candle or this area is in the September time frame. So we're going to take the last 4, September, October, November, December, the last quarter of this year, the ramp into the last quarter. And that's all I want you to look at on these. I'm just going to go quickly. This is the insurance industry. A lot of M&A going on in the insurance industry. Here's the transports. Up, flat, up, flat. Pattern repeats, we go up. Transports typically go higher in the end of the year because of the airlines. Gambling. Gambling's been up and down and up and down, and then a big move up, now flattening. Reports from Macau, reports from Vegas are that the revenues are okay, but not as good as they want. So watch this one. If you're doing any of the gambling stocks, watch this DJUSCA. We go on to coal. I'm going to skip that because coal is nowhere, anywhere. The home construction business. From lower left to upper right, this has been a nice stair-step move all through the year. A big move in the last 2 months, October, November. Housing starts have picked up again. House building has picked up once again. We've also had hurricanes that have pushed this indicator to the upside. Can it go higher? I think, but not to the magnitude of the last 2 months. All right, healthcare. Healthcare has been wishy-washy, up and down and up and down. There are some M&A things going on with healthcare. This one I would stay away from. It's not one that I am going to be looking at for the next year. Internet, high-tech, been rolling over. Too much so far this year, 36% on an appreciation from 1st of January to this year. That's what this left scale is over here. That's the percent of gain for the year, if you can read it. It's a little bit, hold on a second. I'll put this so that you can see it a little bit better. And let's change the font so you can read it a little bit better too. Oops. Application settings. Let's make this look and feel too large. Okay. All right. There we go. I think you can see it now, and let me just tighten this in a bit. I'm going to take off my camera for a bit so maybe we'll see it. All right. So the internet's 36%. Let's go on to some of the other ones that are really interesting. Here's the real estate industry. 6% this year, flattening out. I don't think there's much there to be said. How about the railroads? Railroads, big start to the first of the year because of the Trump move for infrastructure. Flattened through the middle of the year. Big push again at the end of the year here for more infrastructure movements and more of that Make America Great stuff that these got going on. 30% a year on the railroads. Some good names in there to look at. Retail. Retail has been the biggest boon in the last month. Is it too far, too fast? Yes, I believe so. I believe this is at its peak, rolled over, looking to retrace probably about 30 to 50% of October's move as an index itself. It's up 19% for the year. If it finishes up 15, I would be very surprised. Here's the software industry. Big move last month. Chip makers factor into this. Nvidia, biggest move on this one. Nice stair step through the year. We're up 38% for this year, probably at its peak. So it's going to flatline or stagnate for the next month or two. Bank stocks. Up at the first of the year with a thought of some sort of tax reform, back down because no tax reform helping the banks. Then we get a move to the upside because interest rates are getting better. The interesting point here on this one is the red candle for December. We've got a rate hike possible from the Fed on the 21st of December. What happened last year in December for the banks? They went from about, from -4, they went about 5% higher in the month of December. Could we tack on another 5% here? I think so, especially if the rate hike goes through and things start to stay stabilized with the yield curve. What's that do to the stock market itself? Probably puts us in a downdraft. Downdraft at the end of the year on a sentimentally bullish part of the year. That's why I'm cautious on the SPX. All right, let's move on. Biotech. Biotech has been all over the area, but it's flattening out in the past 5 months. That's what I think we'll have throughout the first quarter of 2018. Chemical, nothing to there. Drug industry, flat line, nothing there. Oil service, maybe it's found a base. So you got your OIHs, your drillers and such. Maybe they found a base and can move up. Let's move off. Here's the semiconductors. Big move. They're up 38, 40% through November and have been retracing. Is this pulling back? Yes, it is. Is it going to pull back hard? Probably not a lot. Stagnation to maybe a 3 to 5% pullback in the stocks. I'm going to forget about tobacco. I'm going to forget about utilities. Okay, here's the airline from transportation on its own right. Big move in November. Retraced a little bit here in December so far. it's still a push to the high side. You can see December of last year was a big move. That should happen again this year in December. Very bullish time for transportation on the airlines. Broker dealers, nat gas, oil, telecom. That's it for the sectors that are of meaning. Okay. Sectors done. Major indices done. How about if we go into some individual issues? Let's go back to this chart, which is easier to do. Individual issues, daily basis. Let's start with the Fang Stocks. Fox Bravo, Facebook. Well, I made all my money in Fox Bravo this year, right? Well, that's what a lot of the traders are saying. After it made a brand new high about 5 days ago, Facebook has started to go down and down and down as these Fang stocks are being sold to take profits, to find areas that are underperforming for the end of the year. What's the trend for this for the end of the year? I think it's got some support. I've got a trade going on. I'm holding on to that trade as it stands because there is some good support on Facebook around the 170 level. You can see my lines. Let me just go further out in time. My trend line from way back the first part of the year still is bullish. That's my major trend line. My intermediate trend line, which starts in November, should be readjusted. Up until yesterday was here. Well, Wednesday, we broke that in the big decline in the market had. So I said, okay, I'm going to discount this huge red candle. What does it do the next day? So Thursday, it bounced up. Well, it still gave me a tail. So let's readjust this. And today's sentimental move gave me another tail. I've got to discount this tail right now, but that's at the main trend line. I've got to watch this for Monday. Also, we've had a downtrend line that it's crossed through. So we're at this kind of confluence of, do I get out of the trade? Do I adjust the trade with a short call that's lower than the long call? That's something that I'll go through in my trades that I've got. But I think we're getting to a support level. We've been at this level a few times. I think Facebook is probably okay at these levels. Yes, it's down quite a bit. Let's go on to Apple, the little guy of the Fang stocks. If you can read charts, you know some charting. This is an M pattern. M is in Michael. M is in Mary. Typical resolution to an M pattern, once it breaks the midline, and that's the midline right at, I guess I could just use the drawing tools, but we'll do that. Just at around 165 to 168 or 170. Give it a little wiggle room. Where does it go? The resolution is down. Let me turn on the drawing tools. Hold on. Turn that off. So the resolution to this is this way. Why aren't you drawing on the screen? Oh, let's just forget that. I haven't used the drawing tools like Peter uses them all the time. But we've got a resolution that if this breaks the midline, then we look for its start, which was here, and its precursor to that, which is down here in the 150, 160 level. Break this, the 160 level could come into play on Apple. What's going to hold it from doing that? iPhone 10 sales, end of the year into the first month or two. Should be very solid. But technically, this pattern resolves itself down. If it starts to turn up, then you've got another pattern of 1, 2, 3 triple bottoms that you can play to the upside. Where do you go for the upside? Well, you go back to the 176, 175 area and you play for that move to that level. Let's go on to the next A in the alphabet, or Google. Google is soft, weak. All right. Still, though, right at the gap level from earnings. Does it close the gap? It looks like it wants to. This would be a play that I would be looking at. This gap fill down to 1,000, 1,006, 1,005 would be a good put play. Very short-lived, very, very close to the vest for a gap fill down to the 1,006 level. Let's go on to Netflix. And you don't like it that way. Netflix, again, if you squint your eyes, you've got an M pattern. But what did we do off of the M pattern? We resolved stagnant. And now we're starting to break below it. So if I take this whole area as kind of an extended M on the right side, where is my midline? My midline has been broken. Where's my support line? It's right back to the start, which would put Netflix to 180 to 185. Also, interestingly enough, if you take the swing low and swing high that were most recent here, and that would be this swing low to this swing high, and why is, from this swing high to this swing low, or from this swing low to this swing high, we can look at Fibonacci's. And either one that you use, you're right at, on either one, about a 50% retracement. Again, very technical, very visual reference that traders will look at. The jury's out on this one. I want to see if it bounces from the 50, which would be around 185, 184, and then gets back above 190. Above 190 and moving back into this confluence of highs back in July to the upside would put me back into this channel once again. So I've got Facebook, Apple, Google, Netflix, Amazon. Amazon, Amazon, Amazon. The big, big elephant in the room, right? Big move after earnings, the upside. Still the trend line is bullish, even though we've come from the top and come back down. If I take a Fibonacci from this high to this low that we just hit a couple of days ago, we need to get back higher. But if I want to take from that high back to its earnings low, and it makes the run, this would be more technically appealing in the fact that 50% fib is around 1132, a 38% retracement, or 61.8 of this move still being garnered in the price, would put us back at 1153. Now, Peter wanted me to talk about this in his upcoming session, or part of this on the weekly trades and what he could be thinking of. We're looking at a directional play on Amazon. Looking at these Fibonacci plays down to that 1160, that 1060, all the way up to the 1220, a retracement of 50%, a directional play back to a level that looks comfortable for a move. We'll get into that when I get into his section for that. Okay? So that's the Fang Stocks. What else is going on out here that looks like you need to be aware of? Well, here's some other issues that you might want to watch. I'll go to the banks first. Come on. Goldman Sachs should be a beneficiary of a rate increase, right? Maybe not. Their prop desk is all but gone. Their lending is all but commercialized right now. So is Goldman Sachs going to benefit from a rate increase? I'm suspect of that from just what I see here in some trend lines or some channels. Had a channel that was going on, nicely bouncing back and forth, broke through it. So if I duplicate this channel and move it to the high point, width, this is about 2/3 of this width, so I can say that comfortably that we've gone from one channel to a new one, bounced up, down, up, and down, looked below, failed, looked below and failed, looked to the top and failed. So where does Goldman Sachs, to me, run through the next month or so? You've got about a 236, 235 level on the low side to where I think it will come back to. And I believe it's topped out. I don't think there's a much more appreciation in Goldman Sachs. I'd love to be proven wrong. Let's take a look at one of the other banks. JP Morgan, same thing. Trend line is the same way. Come on, give me this. So there's the major trend channel. A new one has been pushed through in the last few months, and that one. And so we'll take this as our channel, throw that above, up to it, down to it. But this channel is not valid because we've looked above for enough days that I'm going to, oops, doggone it. Sorry about that. That I'm going to want to make this into an expanding wedge, or a megaphone as they call it. So if I take this trend line and put it off the tops, we've gone to the top in the last couple of days, come back down. So you've got a low on JP Morgan around 100 or thereabouts, and a top at about 108. You want to start targeting any investment or any trade on this one at maybe about 102. That would be my target interest there. The other big bank, Morgan Stanley, same thing. You're at the midpoint of the channel. I believe it's going to come down. Is it going to be a beneficiary of the increase from the Fed and the rate? That's out. It was last year, but I think they've run enough to say that they're stagnant to a little bit on the downside. What else is out there that you should be watching? Let's take a look at some of the retailers. Walmart, big move after earnings, unexpected move on their e-commerce. What's the status of this right now? Stagnant. Here's a good play for a some sort of stagnant trade, iron condor, iron butterfly, something like that that's going to give you premium with very minor risk to the downside, minor risk to the upside for a stock that's showing stagnancy. Costco, on the other side of the coin. Costco has just blossomed since it was hit with the Amazon trade, taking out retail of Whole Food Market. This thing has gone up and up and up for months and is now running well above a channel that it should be in. Too far, too fast? Yes. Next move on Costco, probably stagnant here for price, with a possibility of closing this gap. This gap was huge. Costco doesn't make these gaps except on the earnings plays. This is not a gap that I saw coming, had no financial implications to give me that thought that there would be a gap here. Could we close this gap? Easily. I think we're too far with this, either stagnant or come back down around the 178 level. And somebody brought up Nvidia. Absolutely. I've got two of those tech stocks I want to go through. Nvidia. Doggone it. All right. Nvidia, the preeminent technical company that's making all these products to go into, Bitcoin mining. So what do we see here? Well, its valuation is absolutely huge over the past year. Where's this gone this year? Let's take a look. I'm going to go with the monthly. Why isn't this time frame? I want to customize the list. I need to add this in. Hold on a second. This does not have a monthly. Okay. All right, let's go monthly. 5-year monthly. If you weren't involved in this when it started back in 2016, you got left in the dust. Well, you had an opportunity in the first part of 2017 up until about May. If you hadn't gotten in before May, you were left in the dust, left in the dust, left in the dust, left in the dust. This monthly chart is huge. But the last 2 months, it's been giving back a bit. So let's go to the daily chart. All right, nice channel going up and up and up. So riding the top part of this, going up and then down and then up and then down. So you could have played this in a channel basis. Up, all right, didn't quite get to halfway. Back up, tested it, held on to the upper channel. Held on to the upper channel and then all of a sudden broke the secondary channel. Where is it at now? It's back to its primary channel. Nvidia is setting up for a possible play back to the upside. 1, 2, 3, 4 bottoming tail hammers here, but they're not at the same level. They're at an ascending trend line channel. Higher lows, higher lows, higher lows, higher lows. Very, very much an interesting pattern to watch over the next week or so. Could set up for a nice move back to the mid part of the channel, or if we get another one of these tails that breaks through this low tail back on, well, that's only 2 tails, this low tail on the 29th of November, then where do you go? Well, then you go back to where support was before. And support, to me, seems to be back in this level at around 170. Okay. The other stock on that move to the upside was Micron. If you've been in the time spreads with me for any time, you know that I love Micron. I watch Micron. I have become very ingrained with what Micron has been doing. A move to 50 was well beyond where it should have been. Valuation, my valuation on Micron, around 46 bucks. Well, it's taken a hit for the past 4 days, bounced a bit today. I wanted to buy at 40.50. I missed it today because I was doing some other things. So I missed this tail at $40.50 to buy. Now it's 42.05. May set up for another time spread coming soon, but we've got earnings coming up on the 19th of December. It's very tight for its time frame. Are their earnings going to be good? Probably very good. Does the street know about it? Yes. Is premium expanded to the point where it's maybe not a good play until after earnings? Yes. Gonna watch it. It's one that was great this year. In the past 3 years, it's moved from about 9.5 to 50 bucks. This year, it's moved from about 15 bucks to about 50 bucks. This has been a big mover with the semiconductors. They're going to run into manufacturing headwinds come May of next year when Taiwan Semi and Samsung have their new facilities online. They're going to have competition. So this may be short-lived, and it may be a couple of more months to play with this, but it's looking like there could be another setup coming. All right. let's see. What's some other things out there? Delta Airlines on the airlines. Big move in the past 3 or 4 days. Interestingly enough, if we go back to where we had a big downdraft, then a big retracement back, then a 50% downdraft, and now a move back up, almost 100% of this move from the first part of October into the end of October, back down to the middle part of November. So we're making a 1, 2, 3 legs of a W, or 1, 2, 3, the fourth leg of a W. Technically, I'm looking at this as the fourth leg of a W. Where could it go to? 56 on Delta. How long would that be? Probably out until March. Is it going to be a grind higher? Yes. Does this stock have, or this stock have problems with oil at the prices they're at? No. Absolutely not. Yes, jet fuel is the biggest cost to them, but if they start to see things ratchet up, they will hedge it, as they always do. It's going to be on passenger revenue, seat miles booked, that's going to make Delta go higher, and the net profits they're going to put in. Their business is going very well. Delta, American, United, all those big three are doing very well at the end of the year, and this one, Delta especially, looks like it may be fulfilling the fourth leg of a W pattern. On the note for that, the other one, is American Airlines. Same thing. First leg, second leg, third leg, fourth leg of the W. Where could it go to? 54, 55. Either one of these two stocks could make that 55 level between now and March. Okey-doke. Oh, one I did forget is in the restaurant area, CMG. This is on my I don't want to trade this ever again. Chipotle's got a new CEO, or looking for a new CEO for the company. The previous one couldn't get out of his own way with fixing the business that they've got some problems with their stores. That shift to a new CEO gave it some more life. When will I get back involved with this? Well, it's starting to fill the gap. Here's the gap on earnings. So back to the 320 level. And really a push over this consolidation level at around 325 would be where I'd be looking to see what I could do with Chipotle Mexican Grill as a trade. I don't like the restaurant itself. I don't like the trade at this point in time. It's a little too raucous of the way that it's moving. But once it pulls back into that 325 level and shows me some momentum, then I'll think about trading this once again. Okay. Last one on the big boy list is Tesla. Well, he brought out his truck. He brought out his new Roadster to show everybody. What did that do? Well, that popped the stock for a day and it came back down. Now everybody's analyzing what it costs to build one of those Tesla trucks, how much it costs to fuel it, versus how much it costs to run a home or 4,000 homes. How do they, charge this truck in 90 minutes with enough power that would power 4,000 houses for a year or something like that? This is interesting. I would like to stay away from this stock. Personally, I love their cars. Personally, I can't trade the stock. Technically, what's going on with this company? Well, it is really, as far as technical indicators, it's giving me a lot of craziness. The market just closed. Just heard the ding in my ear. The market is showing me a lot of crazy things going on with Tesla. A declining wedge or a tightening wedge. The crux here on Tesla, I think within the next week or two, is going to be this, this 200 period moving average. Can it get back to the 320, 324 level? The bad part of this 200-day period moving average, yes, it's still going up, but it's starting to flatten out. If it starts to turn down, then you got a bearish mode here. Tightening into this wedge, sure. A play on Tesla, if you have the quickness, the emotionless, mechanical trading. I think you've got a top of 320, 325, and probably a good support level down around the 300 to 305 level. I'm going to leave that up to Peter to come up with a good trade on Tesla that is short-lived. It does not fit into a diagonal or calendar for a time spread that I do. Okay. So at that juncture, any other stocks that you want me to go through before I get into the weekly trades and the time spreads? Let's take a look at how we closed today. Put this back on a 15-minute. Did we do what I thought we would do and come back? Oh, yes, we did. Oh, yes, we did. Hold on a second. Let me go back to the charts. Do I have the chart? No, I don't. Shoot. Do I have it in the flex grid? No, I don't. Not in the automated. Not there, but here. Nope. Active trader. There we go. Okay. Where did we close? We opened at 2642. Let me pop this out so it's bigger so you can read it. I know this is a big problem. So we opened right here today, 2645. Built volume, or built value, I should say, into about the 10 o'clock, 11 o'clock level up to 46.49. Made a new high. Then the news out of Washington brought us down to 2605. So from, let's say, 50 to 05, it's a 45-point drop. Remember, sentimental types of issues that hit the market are only to be traded by the very shortest term traders out there. Futures traders, ones who know what they're doing and can take advantage of this. You've got to be emotionless. You've got to be very mechanical. So if we had this drop, where would you have gotten into mechanically on a futures trade? I would have gotten in below this bottoming tail hammer, which is a doji or a spinning top or a star or whatever you want to call it. Lots of names for it. I would have gotten in around 2644. Put my stop in right at the prior low, which would have been around 46. Maybe given it a little bit more at 48. Or even at the doji level here at 48 and a quarter. So you're in. So you ride the wave. Big wave. Keeps on cresting. It drops down. It comes back up. You give it a little more time. And what do I mean by that? If I have an alert and it goes off, and this would be the alert that it came down and it came back up to this 200 period moving average on a 15-day or 15-minute, I would have had an alert. But I would not have had a stop out there if I were playing a stock or an option. My alert would have kicked off and said, okay, watch it for the next 5 minutes. Well, the next 5 minutes would have put you back into this candle. All right, then it falls, and it comes back up. Another alert goes off, or I put on another alert, and that would have been here on the R3 level. 2620, thereabouts. All right, the next 5 minutes, we open up here. I would have been out of any sort of stock trade or option trade. Futures trade probably would have been out also. But that's how you play these things the right way, mechanically. You find a spot that you're comfortable for the entry. You find a reason to let this go, and that would be if it went below, let's say, a moving average, but didn't violate that moving average, you then wait another few minutes. This takes time. It takes knowledge of how things trade. What's the game they're trying to put together? What are they really trying to do? And how well are they doing it? All right. Then we have the big move to the upside. I'm going to change this. Hold on a second. I know you don't like that as you need filled in green candles. There we go. There we go. So the recovery comes. So if you sold your futures or bought back your shorts when it hit here, where would you buy the long side? I wouldn't have bought on this candle or this one or this one or this one. I would have bought when it crossed the 200. Again, a very mechanical reference or a very visual reference would have put you in. You would have stayed in, stayed in, stayed in, stayed in, stayed in. Maybe I would have gotten out, and that's my trend line, but I certainly would have watched it come back down from the 20, pardon me, from the 50. Once it tagged the 50 and pulled back, that would have been a signal to get out, a mechanical signal once again. Dropped back down, came back to the 200. Ha-ha! Hit the 200, bounced. Hit the 200, bounced. And then the close today, what did we close? 26.43 on a close from yesterday. Now, your charts are probably going to be wrong in the fact that they say we're not green or we're red. We really closed yesterday 26.41, 25. The exchange uses a 4 p.m. close for a month end for their bookkeeping. That's where the number was used today to tell whether it was plus or minus, green or red. So they used the close up here. They used the close at 46.75, where the actual close on futures was 41.25. So what did we close today? Chart says we closed red. Actually, we closed green. I don't have profile for you, but I do have something that you could look at that may emulate profile. Let me go back to charts. Let me go pull this up. This is an indicator that's on the TOS platform called Volume Profile Study. It gives you the volume in the increments that you tell it, and I'm doing it in 15 minutes. And then it gives me a high-low range, kind of a value area with the red bar at the point where it did the most volume. And this is for 5 days, 15 minutes. And if I go in tight on today, here's today. This is the overnight session. This is the current session. Let's turn off the overnight. And turn the overnight off. Time axis. Whoops. Where the heck is that at? Equities. And turn that this way. Okay. Hold on. Be right there. All right. So we'll turn off the overnight session. So if I take a look at today, where is the profile for the SPY today? All right, it starts right here. We start right where this blue shaded area starts. So we started out our big drop because of the sentiment all the way down to the bottom. So that is the low point. This is the high point. And interestingly, this study gives me the area that did the most volume today is right here at the close, at the 264, or if the SPX would be 26.45 even. that means that we had a balancing day. Tried to go higher, didn't work. Gray swan event or black swan event out of Washington, D.C. got the market nervous. They sold it off. The shortest of short-term traders closed out their positions, took really the weak hands out of this market. So the good traders or the strong traders or the ones who have some foresight to look beyond this started to buy, and they bought all the way through the end of the day with a volume area POC that ended up right at the close. So there's a study you can use if you don't have a window profile or window trader that you can use on your platform. Okay. That's it for here.